Alright, good morning. Let's go over today's trade plan. So in the overnight session, we got a pretty decent buy response below Friday's low and got a bounce up to the 22 to 24 resistance area. At this point, heading into the open, that short-term momentum could continue, but we are going to need to see some pretty decent strength on the internals to get any type of sustained breakout above 22 to 24. So right now, short-term, the market is at an important inflection point. If the market is quite strong short term, then we can still get a break above 22 to 24, but that would require some pretty decent internals. It would require initiative buyers to be active above this zone in order to really hold it above this 22 to 24. And it's a risky spot to now enter the market on the long side, right? Because we know that the intermediate trend still supports the sellers, and it's just a matter of how much short-term momentum is there for the bounce. I'm not expecting this to be a huge reversal just yet. Of course, there's always that chance that responsive buyers are entering off that 05, 07 support, and we're getting a pretty decent move up. But eventually, I'm expecting this buying to shut off and actually turn back around. It's just a matter of where that move is going to take place. So if the internals are really strong and the momentum continues, then 22 to 24 can be broken, and on the upside, we can quite easily test the 28.5 to 30.5 zone. There's a major high volume node at 29.5, and that can get tested. Perhaps we get some responsive selling there. If the momentum is really strong, then and we end up going through the 29.5 HVN, from that point forward, we would expect more of a balanced type market where the next zone above the 34.5, 37.5 can still get sellers for a move back down to that 29.5 HVN, and then most likely, once we get that failure, whether it's at 29.5 or at the next zone, and then we come back down 29.5, I don't think that's going to just hold as support anymore. I think we'll have to go below it again, and then we can balance around the 29.5. So right now, as far as the picture goes, short term, it's a bit mixed because we're opening on a pretty strong note on the smaller time frames, but the intermediate trend is still pointing to the downside, and for that reason, we just have to be a bit careful at some of these middle range prices, which where the market can go either way, right? Like right now, the 22 to 24 zone is a 50-50 proposition. It can either bring in sellers right here, and we go down to the 1175 to 1375 support, or we can just balance in a tight range up here, break out, go up, test initial resistance, potentially even the next zone at 34.5 to 37.5, and then get some better response on the sell side. So this is very much a middle of the range type idea right here, and like I said, it's 50-50. It can go either way. This is not a high conviction idea over here. This zone is not high conviction because we've made a pretty decent move into it. We're balancing at the highs, and if that balancing activity continues at the highs, then we could go higher and then find some sellers at some of those higher prices. On the downside, we have that pre-market support zone 1175 to 1375. That's essentially the top of the overnight balance where the breakout started. So if we hold above that zone now, on a retest, and then we start balancing above it, then that would also tell us that short term the buyers are maintaining control, and eventually we could get a move up to the 29.5 HVN, or that initial resistance zone at 28.5 to 30.5. So on the downside, that's an important inflection point, the 1175 to 1375. Once we break it, if we break it to the downside, then the short term would be coming into alignment with the intermediate trend, and we can head lower, test initial support, and potentially even that 1799.5 to 1801.5. Initial support still has potential to get buyers active in the market. We would have to see some pretty weak internals in order to get a strong push below initial support. But like I mentioned in yesterday's recap video, once we get into that 1790 to 1800 range, at that point, I think larger time frame buyers are going to start entering this market more aggressively. We've already seen a pretty decent buy response overnight, but I think as you push lower, into that 1790 to 1800 area, I think the market starts becoming more attractive on the larger time frames, and we'll start seeing some better buy responses at the support zones in that range. So let's keep that in mind as well. So if we really extend to the downside, there could be a pretty decent exhaustion bounce as well. But right now, heading into the open, short term the momentum is currently on the buy side, and it doesn't have to stop until we hit a major resistance area, which would be either initial resistance or even the next couple of zones above it. 34.5 to 37.5 is a good area for sellers to enter the market. In the event that we get really extended to the upside, I'm not expecting a 41 test, but 41 to 42 is pretty much an automatic sell. First time up. That's a very good resistance zone up there. So, we're not expecting like a trend up day at this point. Short term, we made a nice move down from the the 1865s, right, all the way down to the 1805. So it's a pretty decent sized move, right? We moved 60 points in a matter of basically 2 sessions, and we can expect a kind of a exhaustion type bounce now, but eventually even that I think is going to result in more balancing activity. It's going to attract sellers in the market, and I'm not expecting like a V reversal off of this. I think that the market still needs to kind of balance out a bit before we get any decent reversal back to the upside. So for those reasons, we're still going to be a bit careful on the long side up here, especially at these upper prices. And then once we start reaching some better resistance areas, we'll start getting more active again on the short side. But right over here, it is a bit of caution on both sides, on the short and long, because it's a bit too high to go long. It only works if it's a strong breakout. And at the same time, it's not high enough to get very aggressive on the short side. So right now, I think it's better to stay put. Kind of let's get some more information from the market. Let's see how the sellers react to the 22 to 24, and then based on that, figure out whether it makes sense to jump on board on the short side for a move down to 1175 to 1375, or if you're unable to get a good price on your short, then just skip it, right? Because if there's not enough reward to risk, then it's not going to be worthwhile for you to step in anyway. And then the market could just balance between pre-market support, pre-market resistance for now, and then decide on more of a directional type move. But right now, short term, buy side is looking strong. So caution on shorts until we get to some better prices. At the same time, once we head lower, 1175 to 1375 could present a decent opportunity on the long side, but we do want to see the internals holding up relatively well, and we don't want any strong momentum on the downside. Like we don't want minus 1,000 tick readings as we head into pre-market support if we're going to take that on the long. So those are our main ideas heading into the day. Let's see how well the buyers can hold it together up here, and we'll take it from there.